Old Mutual was founded in 1845 in Cape Town and is a global long-term savings, insurance and investment group.
Right, and as we know, the new CEO, Bruce Hemphill, is in the process of basically breaking it into a series of constituent parts. And the four parts would, broadly speaking, be the ones that we know. It's the UK-based wealth management business, a US asset management operation, Nedbank, and then what they call emerging markets, which is the traditional insurer, life insurer and financial services product provider here in the Southern African region.
So this one's been through a number of different incarnations.
Wait, you're supposed to read the market cap.
180.8 billion. I'm so excited about the conversation. 180.8 billion rand, price to earnings ratio is 14.9, dividend yield is just over 5%. Coming back to my point, you had Jim Sutcliffe, you had a number of capital misallocation situations within the Old Mutual Group. You then had Julian Roberts coming in, pulling everything back and undoing most of what Jim Sutcliffe had done. Are we seeing now Bruce Hemphill undoing what Julian Roberts put together?
I wouldn't call it undoing. I would say being forced because of principally legislative change and regulatory change in Europe, being forced to go this route because most of the value, the assets sits in the Old Mutual South African business, and that should count towards their solvency and their reserves. But according to the European legislation and regulations, because it's sitting in South Africa and their foreign exchange restrictions, it doesn't count. So there's a huge penalty when it comes to regulations, which has forced their hand to say, we can't be one company. We can't operate both in South Africa and Europe because of these regulations. We need to actually break the company up.
So they're actually being forced into this position.
Look, I mean, I was initially a little bit skeptical what Bruce's plan was, but watching him talk to journalists and analysts around the time of the results, I mean, he is brutally honest about this. When asked what was going to happen to the head office staff in London that look after the group affairs, he basically said, well, they're all going to be sent packing. And that's what shareholders, I suppose, have reacted to positively because there's going to be a real unlocking of value and a saving of those corporate costs.
Let's have a look at the share price graph and you can ask
and just
JP
perhaps
your question.
update us, JP, with that unbundling process. How long is it going to take and what are the likely steps? Which direction are the four bits going to go?
So it might take longer than a year, probably, actually, for the whole thing to play out. And there was a lot of excitement earlier this year when it was first announced. Some of that has subsided a bit because a lot of the excitement was based on that double whammy, positive whammy of saying we're going to save head office costs, plus the conglomerate discount is going to disappear. Yeah. Well, the negative side was they used pro forma accounts for these different bits, and specifically the Old Mutual Wealth bit, the UK business, had pro forma numbers that were a long way away from the actual profit we saw in the last results announcement, principally because of investment into IT. Okay. So going forward in the next year or two, this breakup, what should happen is you will see, firstly, slowly but surely selling down the US asset management business.
So that's going to just go into the market.
Correct.
As it already has been. It's US listed.
Yes, yep. And that they'll just keep on selling those shares. And then the big shift, which I'm sure some corporate financiers are still charging some fees to consult on exactly that will happen, is a splitting of the UK and SA operations.
And the UK operation probably gets sold to a UK investment firm of some sort or another, or maybe listed on its own?
So as part of this, they said they would look for a buyer, but if they don't find a buyer, they will continue with a splitting of the business. Yeah. But in the split, they're not going to give each shareholder a share of the UK business and a share of the SA business, because UK shareholders don't want a share of the SA business, and SA shareholders might want more of the SA business.
Isn't it a relatively tough time to be looking for a UK buyer?
Definitely, it is, especially after Brexit, the pound being weak. Their niche business has grown well because of, once again, regulatory change, but this time a net positive for them, has led to more people going to their advisors and using their platform, which we know in South Africa as a LISP platform, a linked investment service provider platform, to invest. That has been a net positive, but the macroeconomic situation means it's not a great time to do this.
And then only sometime down the line, they'll get to the South Africa thing and the splitting potentially of Nedbank. Yes. And the floating of that off and the residue.
They'll unbundle Nedbank, because once again, they can't just split the business in total, because some UK fund managers are going to get Nedbank shares and they're going to say, what am I going to do with this?
So let's talk about this, hot or not.
Yes, I'm going to go not hot. I remember JP, when we discussed this about 3 months ago, said anything under 40 Rand for Old Mutual was attractive on the splits. I don't think, I can't remember whether I was hot or not then, but I'm going to go not
I
hot
don't think
now.
you've ever been hot on Old Mutual. Hot or not?
It's the one I think there is value in the next 2 years from an unlock. I think I said below 38 Rand, I would, if I need to be very specific,
Yes,
it
you
would
must
be
be
hot.
specific. Paul, you've got to be specific. A share price
Sorry.
is
So yes, so I would say because of the price being lower than that, still potential hot.
hot.
Okay.